What's going on, guys? D. Anthony here with Evolution Traders. In this video, I want to go over the 20 SMA scalping strategy, how you guys can use this, implement it on a 2-minute time frame. Now, the market has been steadily increasing higher. We've had a couple of red days here and there, but right now the bulls are continue to be in full control. The only problem that I am noticing, especially over the last week, we're getting a big move in the pre-market. And then when the market opens, it's kind of consolidating for an hour or two, making it a little bit more difficult on the higher time frames to kind of get those confirmation follow throughs. When I trade options, I've been trading options for around 10 years now. Recently have moved into futures, predominantly probably the last 2.5, 3 years, using all of the same systems, the same type of risk management parameters and all that. Trading is trading, right? But one thing that I have noticed is that the 2-minute time frame does provide a little bit lower risk, and it does provide a little bit of a quicker move in a choppier market. So what we're looking at is a 2-minute time frame on the NQ. There's a couple of things on the chart. I've got the 200 period moving average, which is this line that's up top. I've got the 20 SMA that's here in the middle. And then I've kind of drawn in this low of day here from the pre-market, which is the dotted line. The only other thing you guys can see on my screen is down at the bottom, I have the ATR, which is average true range. I use the average true range for my take profits. And I'm going to kind of explain to you guys how exactly I'm doing that. But one thing that I want you guys to get really, really comfortable doing each and every single night, and especially on the weekends, is going through the previous week or the previous day or the previous few days in backtest. Because ultimately trading comes down to this once you're in the live markets. It's how quickly can you identify the setup, how much confidence do you have in the strategy, and can you execute in real time and keep those emotions in check. If you cannot check off all three of those boxes, it's going to be very, very difficult for you to perform at a high level once the market is open and it's live and it's moving. Now, what back testing allows you to do is mentally replay trades in your head and kind of see where would you get in, where potentially could you take some profits, how does that align with the ATR, what's the best time of day to trade. And mentally, you're going to start to see these trades work and work and work. And sometimes they don't work. But what it's going to do is build that in the back of the brain confidence to when the market is open and you identify these setups to just not really care and just take the trade as second nature. We never really want to overanalyze or overthink things, because we should trust the process and trust the strategy so much that we know that it's going to lose, but we know that it's going to win a little bit more than it loses. That's our edge. Okay. So when trading the NQ, my sweet spot is about the first 2 hours, 3 hours of the market open, as early as an hour into the pre-market. Okay. So for me, I'm in California. I generally start to look at the charts at around 5:30 and after. Okay. So 5:30 a.m. And I like to be on the screens actively until around 9 a.m., which is going to put us at that New York lunch hour time. The way I always kind of look at it is that if I can't make money in the first couple of hours, I don't really have a good grasp on the market, or the market is doing things that are not really aligning with my strategy, which is okay. And it's kind of telling me just to sit out and be patient. So the first setup that we get happens at 5:38 in the morning. Okay. It closes over the 20 SMA, and the range is a 9-10 point candle. So let's just call it 10 points and kind of round up here, because the range of this candle that closes over the 20 SMA is 9.75. So on this particular trade, what we would be looking for is at least 10 points. Okay. 10 points. So how you're going to figure out how many contracts you want to trade is all going to be dependent on how much risk you want to put on the table. So for example, if we're looking for at least 10 points, on the take profit side and I'm trading one micro contract, if this trade fails and I lose, I'm going to lose around $20. So $20 give or take is not going to make me too upset. It's not going to really cause me to get emotional. If I trade 2 contracts, it's $40, 3 contracts, it's $60, so forth and so forth. So in a particular case like this, I might size up to 4 or 5 micro contracts and give myself 10 points risk. So if I'm trading 5 micro contracts, I'm going to lose around $100 if this trade does not work. However, if the trade pans out and I'm able to make money, looking for that immediate 10 points, I'm going to make around $100, which is not bad for sometimes just a few minutes worth of work. Now I'm going to cross-reference this range of 10 points down to my ATR, and I will notice that the range on the ATR, which is the average true range of a 5-minute time period, is 9.5 points, almost 10 points. So it's almost perfectly aligning with the range of the candle that I'm looking to trade and get into. Now, as soon as this closes over the 20 SMA, all I'm going to do is sit and wait for the following candle to confirm the previous candle high. And then I'm going to put a stop underneath that reason why. My entry candle would be on the following candle, and I'm going to look to take profits when I get those 10 points. Now, in this particular case, it goes a lot higher than 10 points. One way that you can kind of squeeze out more profits is, let's say, for example, I'll use myself as the example. If I was going to trade 5 contracts, what I'm going to do is sell at least half size, so at least 2 to 3 contracts when I can cash out 10 points, and I'm going to move my stop loss to break even, okay? And I'm going to let that ride. In every additional 10 points, I'm going to take an additional contract. I hope that kind of makes sense. The second trade that we get happens to set up going into the market open at 6:20 in the morning Pacific Standard Time. And this is an 11-point range. So what we're looking at here is looking to put a stop loss above this reason why, and we're looking to enter on the following candle that confirms the reason why candle. And what we're looking for on that take profit side, again, cross-reference that with your ATR. Our ATR at this given time was only sitting at 8 points. So I want to make something very, very clear. If this candle is an 11-point candle, but our ATR is 8 points, what should that be telling you? That if you get 8 points, you need to be thinking about taking profits, even though it is a little shy of that 11-point stop loss. Now, in this particular case here, the low price that we were looking to get into on this particular candle was 18,527. In a matter of 4 minutes, because we're looking at a 2-minute time frame, we trade as low as 18,520. from an entry price of 18,5275. Now, that's 0.5, 2 ticks shy of that average true range. Now, what I want to kind of signify to you guys is that if you did not take profits at 7 points because you were waiting exactly for the 8 points, this would have stopped you out, okay? It would have stopped you out. So again, not every strategy is going to be 100%, and not every take profit is going to be the same. Even though you're looking for the average true range, even though you're looking for a 1-to-1 on the range that you're giving up, sometimes it doesn't happen. And there's a clear indication here on this long setup that would have been stopped out, and this trade would have netted you a 20-point loss. So again, off the open, trading off the open can be extremely dangerous. And I want you guys to kind of look at these 3 candlesticks here. These 3 candlesticks are immediately off the open between 628 and 632. So one thing that I would kind of recommend is allowing at least a couple, 2, 3, 4 even candlesticks on a 2-minute time frame, or at least 1 5-minute candle to close before you start looking for those entries. Now, on this particular short position here at 632 that sets up, it does not confirm until 2, 4, 6, 8, 10 minutes later, and the low price would have been 18,517. it's a 27-point candle range. That would be your stop loss. But the average true range is only 11 points. So in this particular situation, because the market is so volatile and so rangy off the open, you would potentially be risking 27 points for only around 10 to 11 points of take profit. Now, again, sometimes does it hit for a full take profit of 27 points, 20 points? Sure. But in this particular case, you have to keep in mind what that ATR is. If the ATR is sitting at 10 to 11 points, well, when we get into this trade, if we're able to get 10 to 11 points, we need to think about taking those profits off the table. In this particular situation, the low price was 18,517 and it goes down to a low price of 18,500. So it was a 17-point net gain here. You would have taken the 11-point ATR. This particular candle is 26 points. It happens to set up at 6:52 in the morning Pacific Standard Time. Again, the average true range in this particular time frame was 14 points and it would have paid out at a 1-to-1. So minus the trade right off the open at 6:30 in the morning, that was a loser. You had a winner here. You had a winner on this short position, and you also had a winner here. Now I can continue to go through and back test this. There's a nice winner here, and there's a nice winner here. But what I want to kind of emphasize is that the more trades that you take, the higher the probability is that you're going to start losing some trades down the road and actually starting to break even on some, because it only takes one trade with an incorrect range, or maybe there's a big push in the market, some news events where you can kind of give back profits from 2 to 3 winning trades. So again, if you manage to catch a winner early, okay, and a winner early, and then you have a loss here, and then you get back in and you take another winner and another winner, this is 3-4 trades that potentially you could have scraped out 30-40 points of the market. You need to start thinking about wrapping it up. Again, greedy traders will always get murdered, okay? So just keep that in mind. Hell, if you take one trade and you take 2 trades, maybe it's time to think about starting to wrap it up. That doesn't mean that you're missing opportunities to make money. It just means that you're practicing good risk management and managing your money accordingly. So if you guys would like to try out the 2-minute time frame, definitely set it up. I recommend that if you can try to, run this system and run this strategy and execute at a very high level, and kind of look to take profits at that ATR or as close to the ATR as possible, moving your stop loss to break even and allowing yourself to see if you can get the full body's range on the price target or a little bit more, just to make sure you understand that if you do win 1, 2, 3 trades, guys, really think about shutting down that computer screen, coming back tomorrow. This business is all about longevity. So it's how long can we stay in the business without getting ourselves hurt and blown up. The last thing we want to do is think just because we have a strategy and we have a way to give us a little bit of an edge to make money in the markets, that you're going to be able to make money each and every single day, every single trade. You're going to have those losing trades. You're going to have those losing days. It's what do you do when you start to lose is what's going to determine the outcome of you as a trader and being consistent. I know a lot of traders that go on a 1, 2, 3 day winning streak. Maybe they've won the previous 5 trades, 10 trades, 20 trades, and then they take that first losing trade. Their brain gets all scrambled. They start to revenge trade. They start to size up. They start to give back profits from the day, from the week, from the month. And next thing you know, they've spiraled out of control, all because of one bad trade or one bad losing day, and they wipe everything off the table. Guys, losses are going to come in this business. If you can't handle the losses and you can't, stomach being a loser, you're never going to make it in this game. I hope you guys enjoyed this video. If you did, make sure to like, comment, subscribe, and I'll see you guys all in the next one.